Good day, you guys. Everyone hear me okay? All right, great. So let's go ahead and get started. It is May 22nd. I hope you guys are all holding up okay. Any of you with grade school kids home right now? I'm just curious how many are trying to juggle extra jobs right now. No, oh, good. That means I can send somebody to stay at your place for a little while. Nobody's volunteering. I tried. All right, folks, let's take a look at what is going on in the overall market right now. So I've got a couple of requests from some of you. So we are going to look at Pfizer. We're going to look some stocks here to begin with. And then you guys, if you have something else you want me to look at too, go ahead and pull those up. I usually start with the overall market, but I'm going to start with some stocks here first. I know, Carl, you were looking at HUM yesterday, and I'm actually going to start with this one because I already have this pulled up, and then I'll switch over to Pfizer. So he was asking about HUM as a continuation type of move. And I went into a little bit of a discussion on this yesterday, and I'll repeat that here today. So what we have going on in Pfizer is that it's just a really big whiplash type of move. And when that happens, it's not uncommon to break the previous highs over here. But to keep going, it can sometimes be a little bit of a struggle. So you can see there's already the two-wave move right here. And so it's kind of trying to do like these three highs, has a little bit of that extra push with that gap trap there. And then exhaustion gap, you can also call it. And then yesterday it had some intraday plays. And so the question that he had was, does this have room to continue into the afternoon? And the thing that I brought up with him is that this had a symmetrical triangle. And the problem with symmetrical triangles is that a lot of times they can do what, you guys? I guess this one's not a symmetrical triangle, it's a rising wedge triangle, but it's still, a pretty tight triangle like that. So symmetrical or, wedge like this. What's the problem? Anyone guess? Expect you League of Traders to be able to answer this one. Exactly. You can get that false breakout. That's exactly the case. So a lot of times what it can do is it could go one way and then flip and turn around the other way. So it might give you a fake break to the upside and then go and turn around on you. It could do the same thing. It could fake break to the downside and then flip and turn around on you. So another thing that I was talking with him about is that the time of this correction here. So here is a nice little phoenix. It's kind of a faster move, almost like a 1, 2, 3 type of move. Then it had that two-wave exhaustion here, and then it started to go past that. So if this was going to put in that third move, I would have expected it to try to go closer to about here. And it could have been stunted because this move in here is bigger with a 1, 2, 3 really rapid continuation compared to over here. So a lot of times that third move won't be bigger than the first move. Sometimes it can be shorter. Now, if this move in here is still like an average size and just happens to be a larger move than the first one, then that third one can be a parabolic move. So like, let's say this is slower, this is a little bit faster, then that can go with a parabolic move. But if that strong move that is much faster than average is right here in the middle, it's harder to get that third move that's going to be as strong. So this can all apply, of course, to our daily time frames too. So when you're looking at any type of swing trade, keep this trend development in mind and the time development too. So to get another strong breakout, ideally what you would see would be a longer correction where you got a nice two-wave correction, and then it could try to break again as long as it held up in preferably that upper 38.2% of this trend move, but definitely in that upper 50%. So that's what could try to get it to go and break out again. So a little bit of clarity hopefully there, and you can see that just didn't happen, but that's what you're looking for to try to get that to give you that extra move there to the upside. So let's flip on over here. I'm going to pull up that Pfizer, PFE. I don't have my charts linked, so hold on one second. I'm going to link these up. We're not going to really need a 15-second chart, but I'll pull it up there anyways. What I do want to add though is we'll make this 15-second chart a 20,000 tick chart. So 20,000 tick is a really good larger time frame to watch. It kind of gives you a different view than what you will see when you're looking just at maybe like a 60-minute chart or some of the other larger intraday charts. Oops. That needs to go back even further, huh? And every stock's going to be a little bit different. So I had a question. I usually get this question, I think like once a week. Like, what is the, how do you translate a time frame chart into a tick chart? And the answer, you take a guess until they match up, because not only is every security different, but they change over time. So you're going to have that happening too. So maybe a 20,000 tick lines up with a 15-minute chart one week, and then 6 months down the road, it's the 10,000 tick chart that lines up. So there's not really a perfect answer for that. Basically what you've got to do is, let's say you want to see the 20,000 tick and you want to, well, actually, let's go smaller. Let's say you want to look at like 1,000 tick. Pull this up here. 1,000 tick here. Load this. Yeah, I don't know why my advisor's not pulling up later data here. But if we're looking at this, then what I can do is I can take the 1,000 tick, I can duplicate it, and then what I want to see is I want to find like a time frame chart where the divisions look about the same. So you can see here this starts right around May 19th over here on the left. And this one, not quite. So try a 10-minute, a little bit too much. So you're really just totally guessing here until you got them approximately the same. And that's really the only way you can do it. There's not any other way. You can even put them on the same chart and put one on top of the other until you get them to line up. That can kind of give you another way to do it too. Let's see here. So let's take a look at what's going on here in Pfizer. So here's the daily chart on Pfizer. We came up about 76.4% retracement, a little bit higher than that, but it's basically congesting along that 76.4. So this still has room to push up more. There's a little bit of a slowdown here though. So you can see that kind of wider move here in the middle. So it starts down here, a little bit of a longer correction, has the wider move in the middle, and then does that third move. So that kind of exhausts it here. This is just what I was talking about on HUM. So we're seeing that happening here. It's almost looking like it could go into a shallow avalanche. That would happen if this goes and kind of bases out like this. It could even do it with a tilted shallow avalanche. Let me show you what that would look like. So here's your two-wave correction right here. And notice that it's a slow time correction. So if this goes and it does something like that, that could bring in selling more strongly again. So right now it's at kind of a tricky spot because it could kind of do either or. It's going to come down to what happens with the smaller intraday moves at this point. It can do a little bit of an inverse head and shoulder still and try to get that push up into that 100%. But if it can't get off of this support right here that we're seeing intraday, let me put that on an intraday chart on like a 60-minute. So if it can't get going off of this support, here's their two wave that we're looking at for the correction. So we only have one move up at this point. If it can't get going off of here, then that could easily hang around in this level and then try to break down. So what we really need to see for the bulls is some intraday strength coming back in to allow this to shift better and give a better buy. And right now, there's not much indication of that happening. On the intraday charts, you can always try buy levels off of this, but keep your stops really tight. Use advanced trade management. And if they aren't going, then you don't have a big risk compared to what your potential reward is. But it is going to be riskier because we don't have a really core setup in here right now. In fact, this is going to be past the 76.4% fan, my guess is. Those of you that got your fans on your charts, you can check it out, see if that, but my guess is that this is pulling past where the 76.4% fan is. It's probably right about there. So that's going to make it harder to bounce to. It's right around, my guess is 76.4% retracement though. And that's the only thing that's really kind of holding this in here. Yep, exactly at that 76.4% retracement. So smaller time frames, you might get something going here, but larger time frames, not so much. Smaller time frame, kind of a phoenix, but again, it's risking doing a flush. This would have been better if when it came down in here, it didn't pop up quite as far here and then had a phoenix right in here. Especially if it did like a shallow phoenix like this with a slower upside move and then a slower pullback, that could have got momentum going really good. And then you would have had that inverse head and shoulders. So right now it's kind of iffy. This type of move where it's just overlap, 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 it can flush up and then drop. So a little bit more concerned about that. At this point, you know, something that could do maybe a megaphone would be better to try to get it going off of the low. I probably would stay away from this one on intraday charts right now. Let's see, TSM. So see, this is kind of the sort of thing you're risking here is that the longer this kind of holds at this level, since this pulled back so far already with the two-wave move, If it just kind of hugs around here, that can get momentum going again and pull back down into those previous lows. So these always risk having a shallow avalanche try to develop. If they go higher, it's better if they hold up a little more, don't have as strong of these drops here within the two-wave correction. The only way that they try to really turn around and work out is if they then go into like an inverse head and shoulders. This one would have to be like a double head to try to have that happen. It's just going to be trickier right now because of the intraday momentum. So the easiest move for this one is still going to be on the downside right now. Even if it tries to break the channel here on the upside, it could still break that channel and then break down again. Verizon's kind of running into the same type of thing. This is a big one for a lot of people that are holding for like dividends. Just put this up on some larger time frames. Look at the daily and the weekly again on this. Or not the daily, the weekly and the monthly rather. So, you know, we've looked at this a couple ways. We've looked at this as the potential to just be kind of like an early breakout attempt. So it can pull back into this range here, still hold this zone, and then try to go again. I think that has a really good possibility, but it also leaves the door open at this point to try to pull back further. It actually looks a little bit like what the ES did. Kind of, let me grab that. So see how the ES kind of had like this flush here and then popped back up and kind of pulled back down into the support zone in here. That's kind of the same type of little flush that we're seeing happening on Verizon with this move down here and then the pop back up. So I'm a little concerned this could kind of like chop back down and just kind of keep doing a lot of overlap as it pulls back down. This is a little bit of a better time frame to see that on. Let me put that, see if I've got an ES chart here in the background. I do. Hold on, let me put that over there so you can kind of see them on top of each other. Oops. Close this. Mm, 30 seconds, probably better here. So what I'm kind of looking at here, I'll kind of like line these up. Is how this flushed and popped back up and then just kind of crept down again before it tried to pull back up again. That's the same thing that could happen here on this Verizon, to pull it back down into the middle of that range there before it tries to pop again. And then I think that we could get a good pop at that point, but I would love to see it if it could do a lower low as a zone to add in. That would just give me the lowest risk for adding into a longer term investment type of play on this. So what it would do is on this time frame, it would shift that momentum here. So it would come back into that range, and then that would allow it to have the potential for stronger break again. So the daily so far is doing that. We'll just have to see if it can continue along that path. And that's something that would take a couple of months to really play out. It's always possible it tries to hold earlier, but it just won't be as strong of a setup. If it holds earlier, there's more of a risk. It could just, pop and kind of shift and do that again. So this would be like wave one down. It would do like a congestion and then do another wave down. Then maybe a little shift down here and then the bounce. TRQ, that is one I'm not familiar with. What's the security precaution? That was a beautiful phoenix this week. We are way down where this was one that had like the parabolic move over here. And ironically, look at that, you guys. See what this did right here? It was that move where it flushed up and then kind of kept creeping down, except it had a little bit of that extra strength, just like I just drew as a possibility on that Verizon. So if this had had like more overlap here, it would have tried to do some of those pops in here. Instead, that overlap zone happened down here. And then we started to get this trying to pop. It just couldn't do too much though. Some of them, once they get back down, they will have like a really rapid pop. And then a lot of times what happens, it will do a rapid pop, it'll kind of come back down again, another rapid pop, but usually not as big as the first one. And that's kind of indicative of a security that's just like dying. And it takes something very massive to get it going again, if it ever does. This tends to be down, penny stock newsletters and that sort of thing start to take over at this point. Here's another example of that narrowing triangle wedge. So you can see how it broke first, came back up into the range. So on the ones that continue, what will happen is that this will go into like another range over here, almost double this. And then it can try to go again at that point, as long as it holds up after it does the downside flush. This one didn't, it formed an avalanche. But this beautiful example of a phoenix on here. In fact, if I put the volume on here, what you would want to see is volume declining in that zone. Let's see if it does that. It does. Can see it, especially when I pull it over. You can see that volume drop here. And look at how it is the lightest right as it's coming into that second low. So that tells me that this is getting ready to do that breakout. And the fact that it had some higher volume over here is good too. So usually what you'll see with volume in Phoenix is that it will go down first, it'll pop up, and then it will go down, but the overall thing will form a descending triangle. So it's not perfect, but the lightest volume right here, that's exactly what you want to see. And then sometimes it will decline again when it pulls back here. So see this retest in here? That's the same type of thing I'm looking at the possibility of trying to happen on that monthly and weekly of Verizon. So where is this going to go now? It's kind of picking up momentum. So a lot of times If your normal target's 100% extension, the faster ones can go to like 123.6% extension. So there's still room for this to try to pull higher a little bit, but it's not something that I would do anything with at this point. Usually things like this, I tend to focus more on maybe like a short-term swing. And I haven't traded a lot of these for a long time. But when I was doing more swing trading, that's what I would look for, as long as I could catch it with the Phoenix. Basically, the rule of thumb is if you take this first impulse move off of the low, if it's still in that lower third of that impulse move on the breakout, you can usually get continuation. So if you're looking at, let me kind of widen this up here. So I'll put on the Fibonacci, whoops, whoa, we don't need that. Extension here. The rule of thumb would be as long as you've got a setup that is in that lower third of where it would be the measured move, then it's still worthwhile to take it for a continuation based upon some sort of intraday setup. But once it gets past that, I'm not going to be as keen on doing anything with it. That's okay. I will put it on a replay. So you're about 20, 25 minutes into the class, Prakash. Microsoft. Microsoft is a good example of what I was talking about, you guys, with the 3 waves. So see how this middle wave is 1, 2, 3 here, and then it goes for a third move, but it's kind of stunted. That's exactly what we're talking about. So normally this kind of goes all messy here and you get a lot more overlap. So this is a really high risk zone for traders. You'll get a lot more back and forth type of action. You can watch for things like avalanches and phoenixes on intraday charts that can go and give you multi-day moves, but you want to use a lot tighter risk management with that type of stuff. So you use like the advanced trade management skills that I teach you guys. We're going to be doing more advanced trade management over the next 2 weeks in League of Traders too. And we're going to be looking at hey, is this part of a trend that is a brand new trend that's going to give you a much bigger move? Or is it something where you just need to focus on the smaller setups and it's going to be more of a back and forth type of thing where I want to go for like just one-to-one return with measured moves here, like measured move here, breakout, buy it, breakout, versus is it going to be something where this then goes to a larger trend? So that's what we're going to be talking about. For forward focus for last week, I did not get a session done. So what I did was I put up one of our sessions from League of Traders where we were talking about the overall market. So you can go back and watch that. I think it was Tuesday's session. But that should have been up there on should be up there on YouTube right now. And intraday on this, you can see this is an example where it's trying to gain steam on the downside. It's not as pretty as like what I was drawing earlier, but it has the 2 waves. It breaks the channel. You've got 2 waves up, and then this can go and gain momentum on the intraday. So I'm more on the bearish side on this on the daily chart right now and on the 60-minute. Let's see here. CGV. Oh, CGC, sorry. CGC. I'm like creating two things at once and mixing them together. I was watching gold actually as we were going into session because it had a really great buy setup on the intraday charts for a scalp setup. And it's just hit first target levels. That was really pretty. So we'll go look at that here in a second too, because some of you guys are asking about gold. Daily on this is another one that's like what we were talking about on Verizon. So, you know, see how it did the breakout and then it came back in, popped, and then had kind of more overlap. This actually flushed a little bit more, but then it's trying to go again. So it makes this whole move here, the correction, the Phoenix. So what you're looking at is, you know, measured move levels here and up at this point, and it's kind of rounding off on this daily. The weekly is a little bit more iffy. It's a little bit of a momentum reversal plus, but it's still pretty strong average momentum. Even though the momentum is shifting, it's still pretty close to an average move. So this could pull up a little bit more, but it might go into an inverse head and shoulders. It doesn't have to. It could still just keep going and, you know, come up into here with more of a megaphone before it stalls. So we could still see that momentum picking up. But be aware that since this was so strong here, if this speed slows, it might go for an inverse head and shoulders or even a momentum reversal again. So this is your first one, 1, 2, 3. You can see how it did the two waves up and then kind of flip back down again. That could repeat on a bigger scale. I would be more inclined to think that it's going to hold and come back up into this zone here. So I would have a target of about 30 is what I would be looking for. And then if something substantial changes in terms of momentum on a daily time frame, make an adjustment based upon that. But right now, it's looking pretty good. I'll grab some of my gold charts here too in the background. Hold on 1 second, you guys. Winner, winner, chicken dinner. Nice. Hold on, I'm just grabbing those gold charts and putting them into my Telegram channel so that we can look at those because I don't have them open over here. You'll see kind of a repeat on gold of what we've been talking about basically all session here too. Once I get it up for you. Okay. All right, so ACB, a beautiful breakaway gap here. Nice coming off of a 2B. Look at that volume down there. Really nice for the bulls. So this is something it still can pull up. This is going to be a tricky one though. So I would like for the bulls for this to even pull back down once and then come back up, because then that creates this megaphone in here that can allow that to go a bit more strongly. So this is a 60-minute chart. Let's do a 10-minute. Yeah, this is, we call this zone of pain because it's kind of an either or type of thing on the intraday charts. If this had another second wave down here though, it could go and create more of a megaphone type of move where that could go and pull up again. But I don't know that I would do anything with this. If I was in it already, I'd be holding on. But it's not a zone I would typically initiate a new trade. You can see there was even a little baby 2T here. Yeah, this says stay away from me. You don't have a strong edge entering a position at this moment. You can see that shift in momentum down here. So sometimes this will flush up, it will go and do a lower low and then bounce again. This is kind of tricky. All right, let me show you guys those gold charts. By the way, if you ever hear like feedback or anything on my microphone, or you don't hear me that well, just let me know and I'll make an adjustment. So here's a 240-minute on gold. So see how it went really fast, kind of popped up, came back down. So sometimes this can even come back down again. Do another pull back down. So the 240 on this is just kind of It's again not a great zone for larger trades to enter. Just kind of would be a zone of just intraday type of trades. So here's what we had happening. This was the setup that was triggering right when we were going into class. I was like, do I try it, take it, try to manage it while I'm doing forward focus or not? It had the nice drop. And then see how this has so much overlap and then it flushes, pops. We get these retests. That's coming into fib support here. And so this is a buy off of this zone. And then we have the nice little continuation here too. First resistance, this was what I was kind of targeting as an initial resistance zone, because it was also this level here. So with a two wave move, that's usually really strong target level to go for. And it's pushing up through that at this point. So you can see over here is another view. This is the micro on this one. But see that shift there? That's exactly the type of shift you want to see into something like a previous low that can give you a good bounce. And right now it's about here. So it's coming up to where this channel breakdown was. But larger time frames on gold, like I don't think you got much of an edge right now. It's just play the smaller time frames until something starts to develop a little bit better on the larger time frames. And that's kind of like the overall market right now. Hold on one second, you guys. Okay, so I think we talked about this here about 2 weeks ago, where what we wanted to see with TLRY is that we would get a second correction that would be about the same amount of time as this first one. And basically, that's what we're seeing happening. So it gave the trigger for that next breakout. This extreme move here, though, that can impact the continuation over here, so that overall, the channel might go a little bit more like that. So it's basically doing exactly what we were looking at a couple of weeks ago. It took a while to get it going, but then we've got that second correction. Your timing between the highs as it's breaking is pretty darn close. So we have a really good ratio there for time development. I would have liked to have seen a little bit more of a decline in volume in that second little move there. So you can see that most of the volume decline was here with the first one. Ideally, that would have lighter volume here than here. But volume is not one of the things that we consider to be a must-have for a setup. It's just something that would substantially increase the potential on it. It doesn't negate it, but it can increase the probability on it. So it kind of is like an additional assurance factor, basically, when that happens. So we just don't have that additional assurance factor on this one. Still pretty good. Again, I would be watching for the momentum to shift and pay attention to the Fibonacci retracement levels. Originally, I would look at this one as your main trend for your retracement. Let's see where these pivots are hitting on that. Let's see if that's going to be the one that you would want to keep on it. Yeah, so it's right at that 38.2. So this would be a good one to hold. That one's okay too, but I would look at both then. But I would start and just kind of keep it this way, because that 50% would be the next zone. You got also 12 as a price resistance level 2. See a 60-minute. So with this breakout, it could go to do 1, 2, 3, but it kind of pulled back a little bit too much here in the middle. See this pullback here? We've been talking about that in League of Traders this week. By pulling back more than that third there, and it didn't have a 1, 2, 3 over here. So by pulling back more than that third, it can make it harder to really get going as easily. To go and do like a really strong continuation, this is what we would have wanted it to do. We would have wanted this to be more of a 1, 2, 3. Then this could have a price pullback of a third. That's fine. And then it would go and do another 1, 2, 3. But it didn't have the 1, 2, 3 over here. And it pulled back more than that third. So that's what would have been the best thing, to have had a bigger guarantee on the continued upside to keep it with a really strong momentum move. So next time you can watch for that. When that doesn't happen, then these things over here, that's what your risk is. It could have done the same thing where it popped and then just kind of slowly pulled back down again. So you want to see that 1, 2, 3, and then if it retraces a third, it can go and do another 1, 2, 3. Overall resistance in the market right here intraday, for those of you just kind of day trading along with the current market. I'll do a quick review of the overall market before we head on out. And next week we can go into some more of the Forex again. We didn't really get into Forex this week. Nobody asked any Forex questions, kind of surprising. So here's what's going on the overall market. You can see we're up at this, it could kind of do anything zone. So this could even do more of a 1, 2, 3 type of move up here and chop around. It's really a higher risk level for longer term entries on swing trades and things like that, because it can flip around too easily in here. So I would look at intraday charts for setups at this point. And that's been the case basically ever since the reaction off of this third high here. So if that had continued, back down to the lower end of the channel, it would have been way easier for that to have done another move on the downside. But we just didn't see that. It had that intraday shift again in here, pulled it back up. So now it is kind of in that zone of pain, but it's on the daily time frame. So we're seeing good intraday setups and good intraday reversals, but you got to wait for them. So, like here, we were looking at these zones for short side. Then we've got this megaphone down in here. This didn't quite hit a measured move on the upside. So that left wiggle room up here that even in yesterday's session, we were talking about, hey, this could even go and do another flush to pull it up to 100% there. Right now, it could still do that same thing with a megaphone and still manage to make it back up there and do that. So it's really kind of an open book right now. And you don't have a huge edge either way. If this had been able to pull up to that 100% a little bit better up here, then that would be easier to say, hey, you know what? I want to look for more on the short side as we go into next week. And like I said, maybe it might still try to do that even at the end of the day today, but it would take a lot of strength. Let me put that 100% extension on there. So here's what you're looking at, or what I'm looking at, I guess I could say. So we made it up into that 76.4, but it's not up at the 100%. And maybe it hits it at the beginning of next week, and then we start to turn around and correct again next week. But right now, it's just eh. So this is why I call it like a more of a day trading type of zone. You're basically playing like the back and forth moves on the smaller time frames at this point. So you got your two waves down coming out of that megaphone yesterday morning, and then you're looking on your way back up. To do a megaphone, ideally, this would have a pretty steady trend, at least to like we're chasing about 2/3 back up, and then it might do another base here and then go up again. So that would be close to like a measured move here. So to get up to that bigger megaphone, the 100%, this would need to do a longer correction to get up there easily. If it does the same time correction, then it might not quite make it to that 100%. It could still stall short of it, and then maybe try it with like a 2T after that. So time development is really important here. Same time development, then you're looking at, more of a measured move. This would be wave 1. This would be like first correction, second correction, wave 2. You could also call this, depending upon how you wave count, you could call this 1, 2, 3, or you could call it 1, 2, 3, 4, 5, just depending on which zone, which school of technical analysis you want to use. So really kind of no big, just like the last couple of weeks, no really huge big bias right now. We've gotten lucky on some of our Friday sessions where we've been right at turning points. That hasn't been the case the last couple of weeks here, last 2 weeks. Let's see here. Where'd my ES go? I just saw it. Show you the ES. Whoops. I keep hiding it. Come on. There we go. All right, let me show you the ES here. So the ES is just like really at this midway zone. It pulled up about 61.8%. And this is what we call a zone of pain. It's just messy. You're getting swings back and forth on intraday charts on like a 240-minute or 20,000 tick chart, but not as much of a bias. So this is going and seeing, can this do a 1, 2, 3, a base, and then, try another 1, 2, 3 on the upside? It might, but it could also just flush up here and then turn back around again. So there's so many options at this point that are going to depend upon what happens on the smaller scale right now. So what I'm talking about, like by smaller scale setups, are things like this, where you get the momentum reversal and then this went into a shallow avalanche. So then it pulled back down, hit the target you would usually get as like a 90+% chance of hitting on a momentum reversal. Then it kind of flipped back around again. You can see like you're getting measured moves here, so that's triggering nice avalanche setup here. So we're getting good setups, but you've got to go down to like a 240-minute chart and then even use the smaller time frames to guide you even more. And right now, this is kind of a mess. It might go into a little bit more of a megaphone type of move in here. This momentum was so strong that it's hard for it to just turn and flip back around again. Usually if it pivots and holds that high, then it would go into more of like a shallow shift. So it would start off slower and then gain momentum. But it could also do it with, slightly higher highs and then reverse. So really tricky right now. We can even see these go into a base and do 2 more waves up. Lots of options, and it just comes down to how the momentum shifts here. But there's room for any of those on the daily time frames right now. So you want to follow along in League of Traders on the during the week next week to kind of have better feel on what we're doing on the intraday charts as those shift. So like here we had the nice shift off of the lows pre-market. This was a shallow avalanche here. And see how that gains that momentum? So it hit it really hard and fast, but then it went into chop and then gains momentum. That's just what I was talking about. But on, this is on a smaller scale, but that's just what I was talking about having happen on the larger time frames too. And we're kind of in this zone right here. So this kind of helps give you a better feel for it because it went into the megaphone. This was a huge megaphone, but then it went into the avalanche over here. Now it triggered overnight, but that still got the move going. Look at the megaphone on 500 tick in the NQ. Okay, hold on a second. What am I missing? Hold on, clear this. So, I mean, I see like this, but it's also like a 2-wave correction here. So it could still do more upside like that. So I'm kind of, I don't know. You had little Mega Phoenix right here. Is that one you're talking about? Yes, that's it. Okay. Yeah, that was a beautiful little Mega Phoenix. That was around the same time as gold too. Hold on a second, you guys. Yeah, unfortunately, I didn't catch that one, Nicole, but I mean, the timing for it was really nice because you had your 2-way pullback. Your time development meant that, buy setups could start around here, but since it hit so fast, it kind of did an extra flush. And then it came up. So right as it's coming up to the upper channel, you've got this Mega Phoenix. Let me show this to you on a smaller time frame. She said the 500 tick chart. I was looking at the 1,000 because usually you can see the setup on that time frame too. But here it is on the 400. And then it's a lot more clear on that 400 tick. And then see this lovely little shift right down here as it goes into that lower low. That's beautiful. This triggers the buy here. And then you're looking at the measured move there as the target. Did you catch it? How many of you caught that? I know I've been seeing a lot of you trading the megaphones today. A couple of you did? Awesome. Harvey's like, yep, I got it. I did. I've created megaphone monsters. Look at this one. See, here was the one down here at the ledge. This was the one you took earlier, right, Nicole? I think you took it on the short side. Yep. And Donna. And Donna too. It's so hilarious, you guys. Once you like really start to understand how I trade, so many of you take the exact same setups. Your entries and exits might be a little bit different than each other, but you're playing the same patterns. And that is beautiful to see. I love that. And even if you're not like day trading in the futures market, you guys, these same patterns are applying to swing trades in stocks and even like investment patterns on stocks. Donna says, since the megaphone is not easy, this is quite an accomplishment on your part to teach us this successfully. I think every pattern from like a beginner's perspective is not easy, but once you're playing the same pattern over and over and over and over and over again, it does become a lot easier. And speaking of which, for those of you that have not heard already, I'm doing a class tomorrow at noon, and I'm going to be teaching you one of those setups to start with. And it's going to be the one that I think is the easiest of all of them for newer traders to begin with. So the link for that, you guys, https www.tonyhansen.com/Saturday. So I'm going to type that link here in the chat. Make sure you sign up because I will send a replay. Obviously, I want you there live, but I know sometimes it's not possible to do that. You're going to learn a lot more live and then watch the replay because the second time around, you're going to pick up things that you missed the first time. And if you're there the first time around, you get to answer all your questions. I know marketing teams have always hated me when I said that. Yes, of course there's going to be a replay. They're like, you're not supposed to tell anyone that. Then they won't show up live. Did I mention that marketing is not my forte? Richard is correct. Catching a good megaphone trade is like hitting the right note on a guitar. I know you guys are harassing me to start playing guitar more so that I can play for you. It's been a while. And I started out like doing more of like the Guns N' Roses type of music and like old school rock and roll. And then I kind of over the years started doing more classical. You play bass? Awesome, Euless. That was actually how I started playing was because my boyfriend in high school was bass player. All right, you guys. Well, thank you all for joining me here today. It's been a great session, and I do recommend you go back and you review these when you can. I try to get them up on YouTube, but honestly, sometimes it ends up being later in the weekend. So if you harass me in private message, it's like, hey, Tony, reminder, go post it now. Because I wish that it didn't take so long to convert them right after the session, because then I would go and do it right away. But, life happens, get distracted. So harass me for them, and that always helps get them up faster. All right, you guys, I will see you tomorrow. Have a wonderful rest of your day. Down peg.